This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little B for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Right now, the CoinDesk Bitcoin price XBX index is at $44,523. Bitcoin is making an advance of about 3.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Looking at some of our top stories, Blackrock, the world's largest asset manager, is planning to offer crypto trading, say CoinDesk sources. The $10 trillion asset manager will let clients, which include public pension schemes, endowments, and sovereign wealth funds, to trade cryptocurrency and borrow from Blackrock by pledging crypto assets as collateral. The timeline for unveiling the service is unclear, and Blackrock did not return comment to CoinDesk. All right, El Salvador's initial $1 billion Bitcoin bond issuance is coming as soon as March 15th, according to Finance Minister Alejandro Zelaya in a local news interview. He also confirmed that the bond will be launched on Liquid, a Bitcoin-based service created by Blockstream, and come with a 6.5% coupon. And crypto advocates pushing back on Sweden's call for an EU mining ban. Regulators are worried renewable energy will be channeled towards crypto mining instead of national grids as EU's energy crisis worsens. Crypto advocates argue that there has not been a significant pickup in mining in the EU, and the founder of the European Crypto Mining Association adding he's not worried about a crypto ban in the region because there might be nothing to ban.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
And if we're looking for one of the reasons we saw a sell-off over the weekend in Bitcoin and a subsequent rally, we take a look at mining activity, or miner selling and buying activity, or accumulation activity. Bitcoin miners sold part of their holdings over the past 30 days after months of accumulation, according to Glassnode data. Miner net position change shows the net change in Bitcoin supply held by miner addresses. Red bars indicate periods of sale, while green bars indicate periods of accumulation. And you see over the weekend, there was a net sale for the first time in 2022 after previous selling in a period of November. While miners have been mostly accumulating Bitcoin over the past 2 months, sales over the past 30 days likely contributed to a decline in Bitcoin prices. In other market chatter, investors are pondering the potential impact of the latest development around Bitfinex's hack in 2016. As CoinDesk reported, the U.S. Department of Justice announcing Tuesday that it seized some $3.6 billion worth of Bitcoin tied to the breach. The number marks the largest financial seizure in history by U.S. law enforcement, according to the Department of Justice. All right, joining us now to discuss is CoinDesk Director of Professional Content, Galen Moore in Boston. Hello there, Galen. Thanks for joining us. So just taking a look at Bitcoin right now, we are seeing a bit of a rally. I wonder what's behind this boost. Is it just some sideways trading, or are we getting out of the bear market?
Gosh, I don't know, Christine. I'm pleased to see Bitcoin up over 40,000. I kind of think that's where it should be. And I kind of continue to look at the terrifying headlines around the world. What's going on in Europe? Energy crisis in Ukraine, interest rate turmoil in emerging markets. Look, this is a time. This should be a time for gold, right? And yet gold is up 1.5% so far this year. So even that is kind of amazing, right? Considering how it was last year. Woof. So I think when it comes to that asset you hold against a crisis, whether you're a bank or an individual, there's a real sense of a better alternative emerging. And that's like a, $12 trillion opportunity that I think Bitcoin is on a long-term path toward realizing. So I don't know, for me, 40,000, 35,000, I feel like we're on a long-term road somewhere else. I don't know. The gold narrative isn't very interesting, is it? But I still think about it at these times.
Well, one of the interesting narratives I'm hearing and a tailwind for Bitcoin is, BlackRock getting into the game. Their clients include sovereign wealth funds, nations, and this echoes a conversation I had earlier in the week with the founder of Avalanche, Emin Gunnar, who was also talking to sovereign wealth funds. So, we've seen hedge funds coming in, institutional investment throughout 2021. This could be the year that, more nation states, more sovereign wealth funds actually get into the game. And that would be huge.
I think so. I mean, look, honestly, the thing that caught my interest in the BlackRock announcement was that they might offer trading through Aladdin. That would be huge. One of the things that I think holds back professionals is lack of availability via existing workflow. That and the absence of trading on credit, which still hasn't really been solved. But look, I think in terms of sovereign funds, I mean, you said it earlier, the El Salvador Bitcoin bond. I mean, like, honestly, look, I've said before what I think about the idea of a Bitcoin city planned by a dictator. In short, I'm skeptical. But I think a Bitcoin-backed bond is a very interesting and compelling move for a country like El Salvador. And I hope we'll see more of it as emerging economies find, this path to kind of chart their own economic destiny.
Okay, let's take a look at some headwinds. Well, we've got the EU mining ban chatter happening, but again, advocates there don't believe, EU mining is really will harm the Bitcoin network in any way. But we do see a pattern of miners offloading some coins, though marginally. I mean, it's still net positive. I also want to take a look at this Bitfinex story. Let's play a clip from the Department of Justice.
The department has charged Ilya Lichtenstein and Heather Morgan for their alleged roles in a conspiracy to launder stolen cryptocurrency taken during the 2016 hack of a virtual currency exchange. That hack resulted in the theft of almost 120,000 Bitcoin, which at the time was worth approximately $71 million. Today, the value of that Bitcoin has grown to over $4.5 billion. As part of this investigation, the Department of Justice has seized over $3.6 billion worth of that stolen cryptocurrency. This is the largest seizure of cryptocurrency ever by U.S. law enforcement. It is also the department's largest single financial seizure in its history. The message to criminals is clear. Cryptocurrency is not a safe haven. We can and we will follow the money no matter what form it takes.
Okay, a couple of things to unpack there. First of all, crypto Twitter loves that the DOJ is basically putting an ad out there on how how accumulating Bitcoin and holding over time could realize serious gains. But arguably, Bitcoin off markets makes Bitcoin more scarce, and that has contributed to the rise of Bitcoin. So what happens when that Bitcoin is returned back to the market? What kind of impact might that have on price? And even as CoinDesk reported, a week ago, that we had seen these coins moving from the Bitfinex hack, that it could potentially be some downside risk in case those coins end up being offloaded. Well, now we know that it's in the possession of the DOJ. So what happens from here?
I think in the past these events where cryptocurrency has been auctioned by the federals have been pretty well managed and predictable. Certainly there's a possibility that something chaotic could happen. It does seem like that's a volume of Bitcoin that could have a market impact. The liquidity in Bitcoin is sizable, right? Able to absorb a fairly large amount of coin, but that's a lot of Bitcoin. Could something happen there? Possibly, but it's not something I'd necessarily stay up worried about. I mean,
it's listed as a risk whenever something like this happens. When Mt. Gox and the creditors, were announced that they would get their money back, that was listed as a concern that suddenly a wave of Bitcoin would be unloaded onto the market. So it remains to be seen, I think. But it also shows how traceable Bitcoin is, which is could be a double-edged sword. I mean, on the one hand, DOJ loves it. If they really concentrate their resources, they've shown that they can trace Bitcoin from bad actors. But then again, it has a load of privacy concerns for those who do not want their transactions necessarily surveilled by governments.
Bitcoin is cash-like. It's not cash. And I think I've read that some some in law enforcement refer to it as prosecution futures, right? And this case certainly puts that on blast, right? You have an event that took place in 2016. 6 years later, somebody tries to dig up the money and move it and knock on the door, right? I think it, look, I don't think necessarily that in cryptocurrency, there's a tendency to kind of cheer when this kind of thing happens and point and say, look, Bitcoin can't be used by criminals. But I think that overlooks some of the things that, for example, the government in Beijing would view the protesters in Hong Kong as criminals. So I think, the sort of cash-like aspects of Bitcoin and of other cryptocurrencies, especially privacy coins, do lend themselves to those kinds of uses. It is digital gold. And, we need to be thinking as we think about how Bitcoin fits into, a more and more kind of institutional adoption in a regulated world. How do those use cases kind of come out and shine in a way that moves things forward?
All right, Galen, thank you so much. And I gotta say, this is your last appearance with us on CoinDesk TV, and we are so sad. It's been such a pleasure with you every week talking about Bitcoin price analysis, and hearing your insights. So it's a huge loss for CoinDesk. I hope you come back anytime you like. Open invitation out there for you. But once again, much, Galen, thank you for being a wonderful colleague. All right,
it's been a pleasure to be here.
That was CoinDesk Director of Professional Content, Galen Moore. All right, coming up, we'll talk about manipulation in the Bitcoin price spot markets and how to address SEC concerns about them. Welcome back. Commodity Futures Trading Commission Chair Rostin Benham has made a fresh appeal to Congress to grant his agency authority to oversee crypto spot markets in the United States. At present, crypto spot markets are largely regulated at the state level. The CFTC oversees derivatives markets like Bitcoin and Ether futures, and the Securities and Exchange Commission oversees tokens believed to be securities, as well as stocks and funds. In addition to granting the CFTC additional authority, the agency is seeking an extra $100 million in funding to properly oversee crypto markets. Joining us now to discuss is Doug Schwenk, CEO of Digital Asset Research. Hello there, Doug. Thanks for joining us. So the CFTC chair wants his agency to oversee the crypto spot markets and wants $100 million on top of their $300 million budget to deploy the resources needed to do it. Now, you've written about manipulation in the spot market. So I'd just like to hear high-level first thoughts.
I think that it's a very interesting change that we've seen recently. Both the CFTC and the SEC want to regulate these markets. The CFTC would make a lot of sense in some respects, probably more so than the SEC. I think it's very interesting that he's pushing, the CFTC chair is pushing this now at this moment. Really does kind of line up with a maturity that we're seeing in the market. I think it would be good for crypto markets generally to see more regulation if the goal is to attract institutional investment and to grow overall market cap, because regulation provides certainty. Knowing that what the regulatory perimeter is, what's allowed and not allowed, and how it's going to be surveilled, would lead to lots more uptick in the sort of professional space than what we've seen historically.
And in your research, you've looked at price discovery in the Bitcoin spot market. So I wonder, what were some of the top influences you found?
Well, what we saw was that typically the exchanges that have been the most mature, those who are leading the market with quality, thinking about those who implement real trade surveillance systems, enforce KYC and AML, do all the right things that we would expect in a regulated market, or are on a path to do those things. Those exchanges are typically attracting better volumes and better indication of where the market's going. Price discovery being the first market to show what the new price will be as it, Bitcoin rallies or it drops or whatever direction it goes. And then other exchanges catch up to that price as the arbitrage in the market naturally happens.
So we have a heat map that you guys have drawn out for us, and maybe you can tell us what we're seeing here.
Well, we are looking at leaders and laggers in price discovery, and where one exchange is leading another in a particular price moment. So when there's a period of volatility, think about the sell-off that happened last year in May. We accumulate all those events through the period that we're analyzing, and we'll usually come up with hundreds of volatility moments. And we'll look and see, which exchange really experienced that volatility first, and which exchanges followed. And then we assign a score, and that scoring gives you a relative idea of how strongly they're leading those events, typically through the period that we're analyzing, and then you can see where that price discovery happens.
Which are the strongest exchanges, would you say?
Well, I think the exchanges that we've found to be the strongest tend to be the ones that we know in the institutional space. It's the Coinbase and Gemini and Kraken and Binance and other similar exchanges who have implemented the highest quality controls and have been attracting the institutional investors as well as retail over these past years.
I wonder how limiting is exchange information, though, when there are gaps in data, for instance, from China, North Korea, which the UN says is using stolen crypto to fund its missile program, the Middle East, et cetera.
Yeah, there's certainly places, there's lots of pockets of activity that we can't measure. OTC transactions that happen on exchanges where they don't report the data, or data reporting is very spotty or problematic. And we don't know exactly what happens outside of these exchanges that do report good quality data. But I think the exchanges that report good quality data, those are the ones that we really should look at when we think about something like an ETF or something that would rely on a price. And we want that price to be really stable and solid and transparent. And transparency is important for those types of things. Now, what happens in North Korea? Not sure that we're going to ever have a great answer for how that will impact Bitcoin overall. But in terms of price discovery, I think we can be confident that's not happening in North Korea.
Mm-hmm. Just one last question before we wrap up, Doug. The SEC wants comment from Bitwise and Grayscale on how they will protect investors from market manipulation in their Bitcoin spot ETF proposals. And I wonder, what would you say to them if you were given the chance to comment?
I think there are a couple of things that would be very valuable here. One is having in place those surveillance sharing agreements, which we know they would need to have anyway from those exchanges that participate, vetting thoroughly those exchanges in a transparent, public, and disciplined methodology, having regulatory clarity and oversight on that methodology, perhaps under the EU benchmark regulation, and then doing these types of studies, looking for evidence of manipulation on a regular basis. And there's no reason that these studies couldn't be repeatedly undertaken to ensure that the price that they're using is a good price that is not being manipulated in an overt way.
Right. Sounds good to me. Maybe you should get a call from Grayscale or Bitwise. All right, Doug, thanks so much for joining us. That was Digital Asset Research CEO Doug Schwenk. And that's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.